welcome. It's finally Friday, and I guess market participants must feel the same. It's been very volatile the last few days, but the good news is the Nifty's held on to 24,300. Good data. Good bad data from the US. Japan's taking a hit this morning. But all in all, we're setting ourselves up for a volatile Friday, I'd imagine, once again. And, of course, TCS.
I would say it's a very good data from the US.
Amazing data. Bad inflation is always good inflation, I guess. It depends on how you look at it, right?
Almost everybody, including Chris Wood, talking about a September rate cut. So that is great news. But you know what? Just the fact that when saw the data yesterday on all groups were talking about how the markets will zoom, and the markets did exactly the opposite.
Because it's already in the price.
So that's the question. What is in the price and what isn't?
No, because the day before that, the expectation that came in was pretty much in line with what we saw. But the fact remains that was the day you had Japan hitting a record high, you had the Dow, the Nasdaq, and the S&P making record highs, right? Yeah. So it's buy the rumor, sell the news.
Perhaps that, a bit of sector rotation also in the US. I would say that's the big factor as well. I mean, there's a limit to how much NVIDIA can pull up a whole space and a whole index, being the Nasdaq. And that's exactly what you saw. Let's quickly pull up for you what's happening, because a lot of global news to cover very quickly. We have, by the way, a power-packed show. We're going to break down TCS numbers, what's coming up for IT. But first, the global cues. It's a weak day of trade, especially for the Nasdaq. I would say that's the biggest hit, 2.5% down. But let's pull up all the indices for you. The Dow was the only index in the green at the end of it. The S&P 500 was also down. The lowest point in quite a few weeks for both those indices. Now, what is happening is exactly this, sector rotation. And though the expectation was that after benign inflation data and better than expected inflation data, markets would zoom, you saw tech being sold. So whether it's an NVIDIA, which was down 5.5%, a Meta down about 4%, all of these got hit. But your small cap indices actually saw an uptick. So that's possibly what's also happening. Remember, that's also an outcome of inflation data going down, right? So you're expecting maybe demand to go back up. That's what's going to play out, and you could see that as a trend. Bond yields, of course, were dancing all the way. The 10-year actually first plummeting and then recovering, finally settling at about 4.22%. And the expectation of a September rate cut up to about 80% of market participants expecting it, including Chris Woods, as Niraj mentioned. So let's come to the core data itself and why that was such a big surprise and why there is so much of excitement about it. So in the month of June, you had the CPI, that's the Consumer Price Index, fall 0.1% versus the estimate of a rise of 0.1%. What that means is that for 12 months, that number has come to 3% increase. It's the lowest in 3 years versus an estimate of 3.1% increase. Now, core CPI is also something that you need to look at because it's the more stable version of what's happening. That's up 0.1% versus an estimate of 0.2%. Month on month, the annual figure is also better than what the estimate was. Your jobless weekly data also has come in, I would say, as a positive. Jobless claims have fallen by 17,000 to 222K. So are we moving towards that soft landing? I think will be the big question overall. And that's what you've seen playing out.
Yeah, I mean, and this core consumer price index as well, which excludes the food and energy cost, rising at the lowest pace since, in a long time from May. 0.1%, if I'm not wrong, that was the number.
Yes, that's what
so quite something. And if Jerome Powell expressing optimism that the uptick in inflation earlier this year was a one-off, are we setting a stage for a September rate cut? That's the key question.
A lot of things can happen
and
between now and September.
What happens if you get the rate cut is what I want to know.
No, a lot of things can happen between now and September.
That's everything else notwithstanding sentiment.
And the rate cut is not my only debate is a rate cut is not happening because the economy is in great shape. That inflation reading, then why do you need a rate cut?
If inflation is cooling off, might as well give a spurt to the economy with a rate
good
cut.
And if the spending is in, then you want to not drop rates.
You
want to cap spending.
So let me just wrap up the global news flow before we go to Wilhelm Buiter, because I think we need to talk about what's happening with crude and Asia very quickly as well. And obviously, the big focus on CPI data. So oil prices have risen after that soft inflation data. So a lot of after effects of what we've seen from that June data. Brent at 85.48. So oil becomes one factor to watch out for. Look at what Japan has done because of that inflation data. Suspected intervention for the yen. The dollar was down 2% versus the yen, and the Nikkei down 2% right now as a result. Let's just pull up Asia for you very quickly to set the stage there, and that's the Nikkei standing out 2% down at this point. So that's sort of the global setup, and let's get Willem Buiter in on his perspective on what's happening with the June data. So September, are you betting on September as well, Willem?
Oh yes, it seems almost inevitable, unless there are very unexpected and unlikely developments on the inflation front. The inflation would have to rise materially, I think, to avoid the first cut at last for the US. Yeah, I think we may, in fact, get more than one cut this year. I think 2 or 3 are quite possible.
Right. William, I'm just going to play devil's advocate here. And I know it was about 2 years ago when the yield curve inverted in the US. We've averted any incident up until now. So there's no concerns as such in that sense. But are you still worried? Because we've seemed to have gotten beyond it. 2 years ago when the yield curve did invert, concerns were very valid on the street. Do they still remain? Are you still worried that we could dip into a recession? Something could go wrong somewhere? A black swan event still on the cards?
I don't think that the yield curve is an informative or useful guide to the likely future behavior of the economy. I know that the inverted yield curve is supposed to signal a likely slowdown, a recession, but I think there's very little evidence to support that, and none at all for the current inflation correction, which has continued with a vigorous growth rate and a strong labor market. So there's no sign at all of a hard landing in the US.
Wilhelm, just one more question. I know you look at the economy and not the markets, but if you have a view here, the risk assets haven't quite responded as positively as people would have thought to the inflation data dipping. Is it a case of it being priced in already, or is there something else?
I think risk assets have been detached from reality for quite a long time now. Really, since the great recession of 2008-9, I think they're very generously valued, and I would not expect the kind of detached from reality upswings they've seen here, having these massively high price earnings ratios. I don't expect that to continue much longer. I see necessary, unavoidable correction in risk markets, long overdue.
Willem Buiter, thank you so much for joining in today and giving us your assessment of the data that came out yesterday. Really appreciate your time. Now,
my pleasure.
What does this mean for the trade setup? I think that's the key thing, right? Because one is that the data has not led to a blowout rally. If anything, there was a bit of a sell-off that happened in the Nasdaq and the S&P. The S&P 500 suffering its worst day since April. And we just spoke about how Asia is a bit of a mixed bag as well. So that's to be kept in mind. So the trade setup for the day today, I mean, global markets really haven't done what was anticipated post such a data, and therefore it's left to our own local cues. And we'll talk about TCS in detail. But mind you, tech is more important from a multiple data points perspective. One, the fact that the TCS numbers are in line, but there is an expectation from both HCL Tech and Infosys. And if HCL Tech doesn't disappoint the way people expect it to, that might be a bit positive for tech at large. Keep in mind that aside of everything else, the ISG Q2 CY24 deal data has not been too bad either. There's a positive read-through for tech. So don't be surprised if tech actually has a good day in trade today. So that's the other piece. And just purely looking at the screen, it seems that people are betting on two things: oil upstream, defense. every second day, one stock or the other from there does well. Oil upstream, ONGC's had a fabulous move thus far. The others are not far behind. So maybe that's one bucket that you certainly keep a keen eye out for.
I would add a few NBFCs to that after seeing Anand Rathi's earnings last evening. But just building on to what Niraj said, tech could be in focus, but I think the fact is that the markets had struggled a little bit in trade yesterday. And if you look at the put call distribution, the activity that was, of course, at levels of 25,000 has now substantially moved lower to 24,400. But the recovery was obvious. 2 days in a row, the markets have dipped and have pulled back really well. Implied Nifty is indicating to a pretty solid start, but I wouldn't take that too seriously this morning, given that Asian markets are mixed and we've spent a little bit of time consolidating. Well, what you also want to keep in mind, something that was positive, was the VIX has finally eased off after many days of gaining. The VIX took a little bit of a breather in trade yesterday and declined. Bank Nifty will remain significant. There will be some earnings that we'll be tracking as well, but Bank Nifty, that was the action that you saw. Struggled, tried to make its way up, but 52,270 is where it actually closed out in trade. In terms of stocks, the stock of the morning has to be TCS. Reported numbers, I think the market is divided on how they're viewing these earnings. Are they good? Are they bad? Fact remains, the management didn't seem too confident about the outlook and the green shoots that we very often talk about in the IT sector. Well, in terms of earnings, revenues were up marginally by 2.2%. EBITDA was down by 2.8%. No surprises. Quarter one is when TCS undertakes wage hikes. Management of TCS has maintained that they've had a good quarter and operationally margins have looked good despite the fact that they've undertaken wage hikes in this quarter. Net profit also declined about 4.4%. So largely numbers not great, no surprises. It's at best met street expectations. What you also want to keep in mind is that all geographies have grown. India has grown more than the rest of the world, and it's largely because of the BSNL deal. Could be a one-off, and hence you can't take that number as an indication of what lies ahead. But for now, a recovery not yet round the corner, but numbers in line with street expectations. A wage hike has been undertaken. Brokerages as well divided on what they feel about TCS. Remember, the stock has also seen a little bit of a run-up, so it'd be interesting to see how this one opens up in trade. You want to come in on this one?
No, nothing more to what you added, but for the fact that most brokerages have either hiked the target price or hiked their rating. I mean, Jefferies is probably the only one which has raised their rating. Everybody else has maintained neutral or buy, as the case may have been, but have hiked the target price. Nomura, Goldman, Jefferies, JP. So brokerages have turned very constructive on TCS. Could be an interesting
Apart from Sajid, everybody seems constructive on TCS at this stage, which we will discuss on Editor's Cut.
Absolutely. My only one line would be is that the management doesn't sound as
confident.
It's cautious commentary for sure.
Yeah. I mean, it's been cautious for the last 4 quarters, right? It's also tough to call it out, and I know you shouldn't mix politics with markets and economy and industry, but the fact remains that most people do believe that till the political setup in the US has, of course, moved on, there will be some uncertainty in terms of
it's the right thing to mix it.
It is the right thing. You agree with me, huh?
No, only because, I mean, that is what is driving business sentiment in the US.
Yeah, I would
which
agree.
Drives business for the Indian companies. So,
then if business is betting on Trump, it should be positive because Biden's doing himself no favors and he's not looking like he's going to move up.
Yeah.
So
I think it's policies, right? It's policies that Trump usually sits on. So while Trump is great for business, he's great for US business, right? And we've got to be mindful of that. But again, clarity on the political front is what tech stocks need. Let's not forget that some of these counters have also ran up. So what you're now going to see is going to be interesting. But like we said, brokerages don't think it's too bad. We may have a different view very shortly on Editor's Cut. I do think that the numbers too were in line, and they've also closed out on their fresher hiring, right? So all that backlog they had, they've actually gone on and closed 1,100 hires in terms of freshers, and that was something that was giving a trigger that things were slowing down at TCS. Not anymore. Well, apart from that, one company that's managed to pull out a good quarter again is Anand Rathi. Profits have jumped in line with the way markets participation has been doing, 38% to 73 crores versus 53 crores. And also revenues have increased quite well. 35% is what we've seen in terms of revenue. So all in all, good quarter for Anand Rathi. AUM also stands 10,000 crores higher in this quarter versus what was seen in the previous quarter. Firoz Aziz will, of course, talk to us and we will get a sense of what that looks like. But good earnings in Anand Rathi as a stock as well. Pull up the one. There you go. The 1 month, the stock is up 5.5%. But there has been excitement in these counters, largely on the private banking book that these organizations or companies are running. While brokerages and discount brokerages may get a hit going ahead, Anand Rathi may actually has not felt or seen any changes in that sentiment just yet. Well, another one to add to the list is an interesting acquisition. This is Adani Wilmar. The Adani Group company has entered into a share subscription and share purchase agreement where they're looking to buy 67% stake in Omkar Chemicals in order to expand their footprint. So this is the third one. This one could be a bit of a mover in trade today. Anand Rathi as well should get a thumbs up. TCS as well will be a mixed bag in terms of reaction.
Yeah. So I'll come very quickly to my list, and I've got Infosys on it for a couple of reasons. One news point which isn't too massive, but think of it as a TCS effect. Infosys numbers will also come out, so it will be on the radar as well. But the news point is this contract they've got from the Delaware Department of Labor to upgrade their legacy systems. The contract is for the state's unemployment, insurance tax benefits and appeals program. But they're also going to develop a new system for Delaware's paid family medical leave program. So I would keep an eye on Infosys and actually the whole lot of the IT stocks as well, but Infosys in particular. All cargo terminals is the other one. Their container freight station volumes are up 20% at 55.9 units. The volume growth is led by increase in port volumes. So all cargo terminals have seen some positive data, one to look out for. Prestige, on the other hand, not so positive. And remember, the real estate index was the biggest loser among the sectoral indices yesterday. Real estate might be in pressure today as well. And Prestige has seen pre-sales for Q1. They've put out their business updates, down 22.6%. Average realizations are up 16% though at 11,934 rupees per square foot, and average plot realizations are 46%. Collections are up 6%. So the reason why pre-sales are down is a bit because of election period. That's what Prestige says. They say lag in approvals and project launches during this period. They also expect pre-sales of 26,000 to 30,000 crores in FY25. I mean, remember, this is also a stock that has run up massively, so you might see a bit of pressure there in Prestige today.
Yeah, I wonder if the expectations of the pre-sales numbers, which they have maintained at 30,000 crores, might actually give a bit of a show to the stock, unlike a Marathon, for example. I mean, if they manage to do 9x of what they've done in quarter one, and which is showing that growth over FY24, maybe that could be positive for Prestige, so could be interesting. But, you know, Anand Rathi just takes my breath away. For a business to consistently deliver 30, 32, 35%, they guided to AUM of 72,000 crores for FY25. They've done 16,000 already.
You know, this reminds me of HDFC Bank.
Or
many decades ago. 30% bank is what it was called when, of course, Puri ran it.
Exactly.
Not like, I don't know, I mean, it's a huge compliment to Anand Rathi to be compared to that. But yeah,
no, but back then, for Anand Rathi could be that in 20 years, right?
Yeah.
If they do
and
this.
And the sector as whole, you can't take your eyes off the fact that a 360 VAM on Nuvama, all of these guys, I mean, Deserve. We talked about Deserve picking up a 260, $200 million valuation.
So watch out for that.
Way more than 20x.
Okay, guys, we'll have to rush because there is a editor's cut waiting. Sorry, we'll finish your point.
That's fine.
I still have to give my stocks, yes, but please. Make your point.
My God. This is like with a stopwatch today. I think it's okay.
We are 8:17, that's why, nothing else.
That's okay. My one single point would be the only sort of downside for these stocks or the fly in the ointment could be the kind of action that the government could take.
But it's not on wealth firms, as yet. For brokerages, yes, Tamanna.
You don't think it will spill over?
Maybe. I mean, who knows? I mean,
on what?
On the regulatory action, but the wealth firms somehow seem to be
because it's sticky income, right? It's,
except for maybe
they should be fine. They should be fine.
Yeah, except for Nuvama, which has got this RTA business, which is also coming under scrutiny. But the pure play wealth business that Anand Rathi is doing, which is the mutual fund thing, that doesn't seem to be thus far. But you are right, Tamanna.
There's no way to, unless the regulator changes the passback to the of course, distributors, it's not going to change. And you can't do that, right? and there's no business at all.
Okay, very quickly, the two stocks. I actually don't have three, just two. All cargo terminals. I thought the CFS volumes of growth of 20% at 55,900 TEUs was very interesting. I mean, that's a strong number, 20% growth. So that was one. And and Z Entertainment. I mean, it's that classic case of Sher Aya. Never know when that happens. But Z is formally called a board meeting on July 16 to consider and approve raising of funds.
Yeah.
Talk is of a preferential allotment. If they do that, and the kind of allottees that they do it, if they do it, could be interesting.
Stock has been trending up. I mentioned all cargo as well, and I'm agree.
So sorry, I missed it.
No, but that's one to watch out for. But Z, I agree with you. Could be one that's buzzing. Very quickly, at at the cost of increasing Niraj's blood pressure. But Azad Engineering.
Or Alex's maybe.
Azad Engineering, he's a cool cat. Azad Engineering has received a 5-year contract from Germany's Siemens Energy Global. I think that's going to be a positive for them. Oriental Rail Infrastructure. Remember, rail keeps popping back up as one space, which is interesting. Company's unit has received 432 crore order from Indian Railways. So that's two to watch out for as well.
Yep. And just before we go to the editor's cut, a very important landmark moment for India as well.
Yeah, absolutely. The Adani Group's Vizhinjam International Seaport, which opened up yesterday, and that's actually huge, at Thiruvananthapuram. It's India's first ever transshipment hub and deep water container terminal. It's made history on Thursday by commencing operations and receiving its first mothership as part of a trial run. The port is slated for full commissioning by September this year. Now, my colleague Vikas Srivastav was there at the port. He's sent in this report from the ground. Listen in.
What we see behind us is India's first transshipment hub being built by Adani Ports and SEZ in Vizhinjam, Kerala. This port saw the birthing of its first vessel, a container vessel which came from China, led by Maersk at this port. This vessel will be formally welcomed by the Chief Minister, Mr. Pinarayi Vijayan, the Chief Minister of Kerala, the Union Minister for Ports and Shipping, Mr. Sarbanand Sonowal, and the Managing Director of Adani Ports and SEZ, Mr. Karan Adani. The port in the first phase will have a capacity of 1 million TEUs, which is a measure for the containers, the 20 feet equivalent units. And in the second phase and the final phase, it will have a capacity of 3 million TEUs. This transshipment hub is expected to help India save as far as the EXIM trade cost is concerned and the losses that it has been suffering because of the transshipment hubs in the neighboring countries like Sri Lanka, Dubai, Singapore and in Malaysia. The port will be formally inaugurated tomorrow. We will present more updates tomorrow from the event.
All right, with that update on the ground, you'll get more updates, of course, over the course of the day as they inaugurate that transshipment port, history being made. And I think we'll all have to practice saying Vizhinjam several times so that we get it right when we have to say it more often. But an easier thing to say, an easier name to pronounce is Tata Consultancy Services, and that I'm quite sure is going to be said several times today. Sajid is joining me to kind of break things down further. Of course, you've already gotten a semblance of what the numbers were all about, and it was, if you can call it status quo, we're pushing the bucket down of a little further down the line when we're talking about recovery, Sajid?
I'm not going to talk about the key numbers of TCS
because
we've already spoken about it. But what's the takeaway? It's what you said is pushing the bucket down.
Yeah.
The street was expecting this to be a bottoming out of IT sector. The commentary and the confidence which was coming through was that it will take at least 2 more quarters. So we are looking at Q4 of FY25 before IT actually recovers.
Yeah.
There are too many things, variables playing out, political scenarios playing out in Europe because you have 2 new governments coming in there. You have US elections which are coming in there politics-wise. There's a shift in the revenue
mix,
not mix actually, profile. So IT companies were mainly targeting transformational deals, big, large deals,
yes,
and our discretionary deals were part of that. That those were the cream on the cake. The discretionary deals have come down in the last 4 to 6 quarters. Now, what we are seeing is smaller deals are also coming down because they are going back to the drawing board. Now,
and they're saying hold off on the final signature.
Signature, because they now want to look at what AI may be able to do for that deal, or whether, because AI is not going to be a big, large deal as the street is trying to put it through.
It's not yet.
It may not be for next few years.
Sure.
And that's what the commentary is coming in. I mean, it will be small deals which will be on experimental basis, part of office suits or transformation deal. But it's not going to be you never will see a big transformational AI deal coming through in the next couple of quarters, couple of years. Okay. Basically, that's what it is there. The second thing which is there is on the TCV. That gives you a good amount. In FY 24, the total TCV was $42.7 million. They had a revenue of $29 odd billion. So we were looking at 1.4 big book to bill ratio. Now that has come down to 1.1 there. And even if you look at the guidance which TCS is giving, 7 to 9 billion, and we are looking at from $29 billion to a 7% growth dollar, and so we are looking at a $31 billion kind of revenue for FY25. We are looking at the book to bill of 1.15. So
which is much lower.
Which is much lower than FY24. And while TCS is saying that TCV is not a lead indicator of revenues, but that's also a lead indicator of orders which are going to come in. So that is going to be a question not only for TCS but also for the IT industry. So the reason that's the reason why we are at a place that it will take at least 2 to 3 more quarters for us to reach.
So the number of calls that you're getting is because you have to head for the TCS conversation that is later this morning. Do watch out for that. It's at 10 o'clock this morning and you'll find it right here on NDTV Profit. The operative point, Sajid, and it comes to pricing and it comes to what the share price is doing right now. It comes to what brokerages are also saying. Do you buy right now or do you not? A lot of them are still saying buy, but some very big voices are saying you should not. In fact, you should sell.
Trading at 26 times forward PE, forward earnings, it's still considered to be little expensive. And it's, Infi may be cheaper than that in terms of valuation. But, if you look at a 3 quarter ahead and you want to bet for FY26-27, it may be a good opportunity at this point in time rather than then. But my point is very simple. Your call has to be long term because we have been talking about this IT slowdown for the last 4 to 6 quarters. We don't know even after 3 quarters it's going to happen or not, because you have North America, BFSI, which constitutes revenues of more than 50% for most of the top IT tier companies, and that's going to be a big, if whether we are going to go back to 7 to 10% growth on those.
The last question, what's a blue sky scenario if we're talking about pushing the recovery down to Q4? Do the floodgates open then? Because we're talking about a lot of companies, as you've pointed out, because it's uncertain, because the political environment is what it is, are holding off on that final signature. Does not mean that what they need is going out of the window. They're pushing it down. So if the floodgates do open up once there's a new administration, perhaps in the fourth quarter, will there be a dramatic increase in deal winning and revenue growth?
So assume that if Biden comes back, there may be, but if Trump comes back, everything goes back on the drawing board, right? So you need to look at from that perspective how Trump has been saying that it has to be in US,
yes,
right?
Protectionism
which is coming in. So there is going to be a big if between Biden versus Trump, or if Biden is not there, who's the other person who has a similar policy?
Closing comments?
Closing comments is very simple. The levers to guide IT companies, which is employee addition or attrition or TCVs, are now getting blurred. It's very difficult for not only companies but also for the street to look ahead. What is very clear is that next 2 quarters, there's nothing going to happen much. It could be a consolidation phase. It's going to be a cautious outlook for all of them. They may grow between 5 to 7%, the top companies. The mid-cap companies may grow between mid-teens. So, the street would be looking at those kind of players going forward.
Sure. All right. And I do want to... so that brings us to the end of this editor's cut, and hopefully we've given you a little perspective.
Well, it is finally the last day of a very volatile trading week that we've seen. Yesterday's trade was interesting, where the markets actually did a sharp recovery towards close, recovering nearly 100 points from the day's low. As we go into trade this morning, global cues are relatively positive, so implied Nifty is indicating to a gap-up start. But remember, if you look at the way the data is playing out on the put and call side, you will get an understanding of what things are. The Nifty 50 trades at a premium with a decline in open interest, so that's very obvious for everyone to see of where there is an indication that there could be an up move on it. Bank Nifty as well managed to just about close into positive territory, but indicating a similar sort of trend, just like the index, with an increase in premium and a decline in OI. In terms of the put call spread, what was very obvious in terms of street action was 24,400 is we saw maximum call OI, indicating that it is an important level of resistance, immediate resistance in that sense for the markets, where you did see active call writing take place as well. Yesterday especially was at the levels of 24,300, but in terms of distribution, followed by 24,400 was 24,500 and 24,600. Those are of course the next levels that the markets will be tracking on the upside. On the downside, max spot OI was seen at levels of 24,000. Again, no surprises there, so that hasn't changed very much. But of course, what we did see was put writing take place quite heavily in trade yesterday at levels of 24,300. So in terms of a trading range, it seems like if 24,100 to 24,300 is maintained, the Nifty will make an attempt to 24,400, at least in terms of the option data that we are picking up on. Well, in terms of Bank Nifty, this one's been a bit of a struggle over the last couple of days, or rather this week especially. But 52,500 is where max call OI was seen, followed by 52,300 and then 52,000. In terms of put writing, 52,000 remains an important level of support on back of the max put OI that was seen on those levels. That, of course, along with a little bit of resistance around 52,200 is what we have. So again, trading is going to be range bound. Bank Nifty and Nifty actually for a change are both indicating or picking up data which are in the same sort of in the same sort of trend. Well, that's pretty much what we have. It is expected to be a quietish to slightly higher start, but remember yesterday the markets were trading with a very clear negative bias. Well, we have with us Amar Singh Dio, who now joins in with his top trades. Amar, how do you feel about the markets? Let's start with an option trade on the index and Bank Nifty, if you have one.
Yeah, I would say that overall Bank Nifty and Nifty both remain positive. So any pullback is a buying opportunity, I would say, because overall the trend remains positive, and most of the heavyweights have also been positive. But yes, we'll have to see how the results come out for the IT stocks, so that and how that impacts the market. But yes, the trend is up. We should be on the buying side. For Nifty, I would give a major level. That's around 24,100, 150. That's a very crucial support zone. If Nifty comes to that level, that can be a very good buying opportunity for a call option. So anywhere between 24,200 could be a good call option to look at. Looking at Bank Nifty also has got good support at around 51,700, 51,800. So that's a level where we can look at some buying opportunity, because higher upside seems to be slightly capped, and there could be some selling pressure at the higher levels for the indices.
So 24,150 is an important level of support on the index, and Bank Nifty as well, high levels, gains could be capped. At least that's what the trend is indicating too. Well, in terms of trades, I believe you've got a strategy on Federal Bank, Amar?
Yeah, correct. So Federal Bank is on a roll, and if you look at the charts, technically also it's very strong, and if I look at the derivatives data, we've been seeing long build-up happening for quite some time. So from 4th of July, there's a significant long build-up that has started. And again, we are seeing some build-up happening there as well. So this is one stock one can look at. So either one can go long in futures, July futures, or also one can look at a call option. So a 310 call option can be bought at the current price, and with a stop loss of 0.5 and a target of 11 on the upside. And the second stock to look at is ONGC. ONGC has also started showing up move on the charts technically. It has broken out of a major zone of resistance earlier that was around 280, 290 zone. So it's trading above that level on significant volumes. If you look at the derivatives data, ONGC again has been witnessing long build-up happening there and for quite many days now. So this is the next stock one can look. Again, One can look at a July futures, or one can look at a 310 call option for ONGC with a stop loss of 1.8 and a target of 13.
So both long trades on Federal Bank and ONGC. Federal Bank, you can either consider going naked long, or you could buy calls of 310 at about 4 rupees. Target price on that is 11. ONGC, you can buy calls as well at 6 rupees with a target price of 13. Very quickly, Amar, it seems like the consensus that TCS may get a positive opening on back of its earnings meeting street expectations. Do you have a trade on TCS or any of those tech companies? Because I'm assuming the sentiment could spread across other companies too.
Yeah, I would say if we look at the IT space, IT stocks have been doing fairly well. But TCS has been an exception. If you look at, I would say, Infosys has been doing quite well. If you look at some of the other stocks in IT, they've also, like, for example, I would say Mindtree has been doing quite well. But we are seeing, and Persistent has been doing quite well. So Persistent is the, I would say, outperformer. One can look at that stock on any correction. Otherwise, I would say one should rather wait and see how the market really reacts. Infosys would be a better bet as compared to TCS.
Right, thank you, Amar. Those are the trades coming in. Infi is a better bet than TCS. Thank you very much, Amar. Long trades on ONGC, Federal Bank, constructive on Nifty, and Bank Nifty. Guys, it's over to you. I think Amar's come out with all 4 positive trading calls this morning.
Yeah, absolutely. And it's seeming like we'll have a pretty decent start to the day as well. Let's look at the implied open before we move ahead and get our first calls. 72 points up on the Nifty is what we could see. Will it be driven by IT? Will it be driven by energy? Let's get a view in from Aditya Shah, founder at Hercules Advisors, and Kush Bora, founder at kushbora.com, joining in. Kush, I'll begin with you on the levels. Let's look at what your take is on the Nifty and the Bank Nifty this morning.
Hi, morning, Tamanna. Well, I think, the setups actually a little encouraging. We were expecting some sort of consolidation, especially just before the, big earnings season kickoff. That's come about yesterday. We are seeing some sort of a positive bias at open, but I'm not too sure if we can add, far too much to those gains. If you see the options data 24,400, as Samina was just mentioning, has a significant base, about 100 rupee odd premium. So 24,400, 24,500 should be the near-term upside, that, the Nifty could perhaps venture. In any case, this is not a market where, you could make a lot of money by going short. So perhaps, any kind of dips towards 24,200, 24,300 should be taken as an opportunity. The broad range that we're seeing right now for Nifty is 24,100 to 24,600. Bank Nifty, for the last 5 sessions, it's been making those lower highs formation. But I'm taking heart from two data points. One, the fact that, we've seen intraday recoveries, in Bank Nifty, which have been encouraging. Two, also the fact that, the 51,800, 52,200 support zones have been maintained. And to add one more to that, the fall in HDFC Bank is now starting to at least decelerate. SBI, ICICI, some of these names have started to participate, pick up where the HDFC Bank, steam had left off. So there could be some positive bias that could kick in. So as long as 51,800 is held, my bias on Nifty Bank will actually remain positive. On the upside, we're looking at a 53,300 kind of a target.
Right. Aditya, we'll start with TCS before we go into the view on the markets. What did you view the numbers like? They were largely in line with street expectations. Commentary, though, not looking very promising just yet. But generally speaking, positive on TCS or circumspect at this stage?
Good morning. So the commentary from TCS as well as the results are stable. In my opinion, there is nothing to complain about. And as we all expect, the interest rate cut in the US has not materialized and will not materialize at least for the next 6 months, at least in 2024. So my opinion is that these results are stable, but the real fillip for the company will come only near towards the end of this year and early next year, not only for TCS, but for the entire IT sector. So I'm positive on the entire IT sector per se. Bad times are a really great time to buy the stock. So in my opinion, nothing to complain about per se. The sector could take some heart from stable numbers, and there is no added negative to the sector per se.
Would be your play for the day on TCS, Infosys, Wipro? Let's just look at a little more broadly on the tech pack.
My number one pick here within the large cap IT space continues to be HCL Tech, then TCS, then Infosys. HCL Tech has a little bit of valuation comfort as well as a dividend play on it. So I am really comforted by that. However, the real juice is in the mid-cap IT space in companies like KPIT or in companies like L&T Technology Services. Yesterday, Tata Elxsi also did not report a good, decent set of numbers. So any sort of correction within Tata Elxsi also could be a buying opportunity. So mid-cap IT space ahead of the large-cap IT space, and within the large-cap IT space, HCL Tech continues to be my favorite pick.
That's quite clear. The real juice in the mid-cap IT companies is the quote that's coming out of there. Kush, let's hear your picks before we get into more detail on TCS.
Sure. A couple of them. The first is Voltas. The summers might be over, but the run in the stock is not. We've seen quite a bit of build-up here. The stock's approaching the near-term highs. We've seen some accumulation over the last 4 sessions, in Voltas. So from a near-term perspective, 1545 and 1575 are the targets. 1485 is where you place your stop loss. You cannot not mention the pharma space. So Newland Lab, which has also seen a fair bit of traction over the last couple of sessions, close to lifetime highs. At lifetime highs, I think, this stock is now poised for further up move from here as well. So from a positional standpoint, 8300 to 8500 are the levels to look at. 7900 is where you place your stop loss.
Few trading calls coming in. Newland Pharma and Voltas, 2 long trades by Kush this morning. But of course, the sector to watch, the stock to watch is going to be TCS and the IT pack. Remember, we're also expecting Infy earnings soon. Girish Pai, Head of Institutional Equity Research at BOB Caps, joins in. Girish, good morning. Thank you very much for joining us this morning. What are you viewing this as? Glass half full or glass half empty? Revenues beat expectations. All major markets have returned to sequential growth. Operating margins have also done okay. This is sequentially a quarter when they undertake wage hikes and hence the impact on margins. All in all, has it met your expectations, the earnings, before we go into what you made of the commentary?
Yeah, thanks for having me on your show. So I think on the headline side, I would say the numbers beat my expectations. So I had a 1.5% sequential CC growth expectation and a EBIT margin of 24%. I think the numbers beat on both fronts, 2.2% on the revenue growth side and 24.7% on the EBIT margin side. But I think if you dig a little deeper, the picture is a little different. And also the commentary wasn't really that positive. So on the commentary side, the company continued to say that the demand picture is very similar to what we've seen in the last many quarters now. There are client ramp downs happening. Clients are re-evaluating their spend at very short notice. So that's a picture that we've kind of seen in the previous quarters too. The TCV number wasn't too great at 8.3 billion. That was down 37% quarter on quarter, some 18% year on year. Which is a dampener. And I would say even the growth number, 2.2%, if you strip off the India portion, which is largely the BSNL did, in my opinion, your international growth was 1%. Yes, it is a little better than what international growth was in the previous couple of quarters. I would still think that 1% isn't like too great a growth to talk about. So net, if you dig deeper, I would think that the quarter's numbers weren't too great. The commentary isn't too great, but the company continued to say that FY25 is going to be better than FY24. The question is by how much?
Feel like, these earnings have met our expectations because we've revised our expectations in that sense. We've gone in with very low expectations in terms of what is the outlook. I know India has grown largely because of BSNL, but the other geographies and the US especially, most believe that a significant recovery can only come our way post-elections in the US. How are you viewing this? Is it lower expectation and hence an beat, or they've actually done okay?
So I would say, if you look at the earnings cycle for the sector itself, I think probably this quarter we'll probably see a pause or maybe a little bit of an uptick. But I'm not sure whether I would want to call for a sustainable uptick from here on, because I think the key number or key thing to watch out for is whether the consensus expectations of a high single digit or very low double digit kind of revenue growth pickup in FY26, and I'm talking of dollar revenue growth here for the tier one companies, whether that is going to come through. There is not much of visibility on it. I think client behavior doesn't indicate that. Of course, client behavior can change very quickly in a few quarters' time. But if you look at how things are panning out from the macro side, while on the one hand there is talk of a soft landing, there is also concern on certain data points coming out of the US, which indicates that it may not be a soft landing situation going into the second half of 2024 or in 2025. And the political side, the political economy, so to speak, in the US. If Trump does come to power, what impact would tariffs that he says he's going to levy on Chinese imports and imports from other countries, how much of an impact it's going to have on inflation? So there are various angles to the story on the macro side in the US, which will probably become clearer maybe towards the second half of 2025 or in the middle of 2025. I think clients will still be grappling with uncertainty in the first half of the calendar year of 2025. So my sense is that the pickup may be delayed a bit, but so we will have to wait and see whether the FY26, a high single digit to low teen kind of a growth for tier one companies is actually going to come through. So that's the debate in the market right now.
Girish, morning. Tamanna here. Just wanted to get your view on a couple of things. That the real growth significantly for TCS is coming from the India business and largely from BSNL. The BFSI growth has come into positive territory after 5 quarters, agreed. But this sort of concentration on India and BSNL as the core driver, does that concern you, or do you see that then panning out over time?
No, if you do nitpicking, yes, I would say. And if you look at the larger international book, which is probably, if you go by the latest quarter numbers, that's about 92.5% of the business. That's it's just picked up in growth. It was probably not growing or probably declining in the couple of quarters before that. To that extent, it is a positive. But having said that, I think the growth this year in FY25 and maybe to the second half of last year was largely, in my opinion, driven by BSNL. And BSNL order, in my opinion, is probably a lower margin business. The company doesn't talk in terms of client-specific margins, but I think that has been offset. So the margin surprise, so to speak, compared to what my expectations were, have largely come from better productivity and better, utilization. And more importantly, the subcon costs have gone down dramatically for the company over the last 3 quarters now. And that has been one of the key drivers of the margin surprise, so to speak. So I think FY25, the growth element is going to be driven to a decent extent by BSNL, which does then put a question mark around the FY26 numbers, because then you have to kind of overcome that number that sits in the base. So yeah, that is a bit of a worry. But again, if you look at TCS has been saying that it wants to diversify its revenue base beyond the US and Europe and look at other geographies. So I would say, if you look from a long-term perspective, yes, the geographic diversification towards India and some of the other non-developed markets is a good thing. But near term, I would think that there is going to be a little bit of worry there.
Point 2.
Girish, good morning, Niraj here. So what does this therefore do? Does it give you, assuming that INFI sounds similar, and assumption of course, would it give you ammo enough to be constructive large cap IT? Or would you prefer, as some people have been talking about, and we haven't spoken for a while, so I don't quite know your view there, but as some people have been talking about whether the mid cap IT would be more nimble on generative AI deals and AI-led numbers as well, and versus the valuations that each of those trade at?
Niraj, so I think if you look at tier 1 and tier 2 valuations, I think both are at premium to what they've been trading at over the last 5 years or even 10 years. Within 10 years, they are like significantly higher premium that both tier 1 and tier 2 collectively are trading at, more so tier 2. So I would say that consensus is already building in a fairly strong growth in FY26, and the valuations, if you look at on the basis of FY26, I would think that growth is already factored in, and probably it's at a premium right now, unless there is a big surprise there, which I think is highly unlikely, the way I see it. And in tier 2, so tier 1, I think the challenge is the growth part. So you saw a couple of years of very strong growth driven by what people call compressed transformation. We're talking second half of 2022, maybe the full calendar year of 2022. We saw extremely strong growth for the sector, which is probably like 3x the normal trend growth of the sector, so to speak. And I'm talking Indian IT services sector, which I think is probably normalizing. And once we get through the FY26 spike, which is probably pent-up demand driven, you will probably see growth back to that 6-7% kind of level for the tier 1 companies. Tier 2 companies will definitely grow faster because of the lower base. But I think from a multiple standpoint, they're at a significant premium to the tier 1 companies. I don't think the earnings growth gap that existed between tier 2 and tier 1, which has been the case, which is pretty significant in the last 2-3 years, is going to sustain going forward.
Girish, just a last point on the AI sort of numbers that TCS has put out, and 270 deals ramp up on AI, of course, but no clarity on when this is going to start becoming revenue accretive or really make a huge difference. What is your take on sort of where they are on the AI roadmap?
Yeah, so this whole generative AI thing is a bit tricky because just like in digital, when it happened like 5-10 years back, the definition itself kind of will be different across various companies. So what falls into digital and what falls into generative AI could be different across companies. So it may not be an apple-to-apple comparison. But I was expecting, because it's the start of the year, that TCS and some of the Indian companies would start giving some metrics around generative AI. TCS disappointingly gave only the pipeline, which is actually improved from 900 million that existed a quarter back to now 1.5 billion. That's just the pipeline. It doesn't say much on the order inflow side or the revenue side, whereas you had Accenture come out and say that the order inflow number for the 9 months of this year, their year ends in August, was about $2 billion, and the revenue was about $500 million. So I would say that, probably Accenture is the only one who's kind of put out this data point. So on generative AI, I'm a little, so it's taken a while. I think it'll take a while for it to kind of blossom and become a bigger part of the revenues. I think the challenge here is that my sense is this surround services spend that needs to be done to implement a generative AI project is a pretty significant number. And in one of the analyst calls, one of the CEOs of a tier 1 company said that it is 25:1. So you need to spend $25 on the surround services side, which is about going to the cloud, doing data modernization, cybersecurity, and all that, to actually spend $1 on generative AI. That is a significant spend, and you need a clear return on investment metrics to actually get those companies, customers, to invest in such projects. So I would think it'll take a while for this to pick up. At least that's my expectation right now. I don't know whether things will speeden up in the upcoming quarters.
Thanks, Girish, for that. That's the word coming in. Girish largely thinks the earnings by TCS are in line with what the street was expecting. So no major disappointment on that front. We'll take a quick break. We're gearing up for another busy Friday morning. It seems like it could be a positive start. And TCS...
right, back with India Market Open right here on NDTV Profit. We're about a few seconds away from the market start today. Quite unlike what one would have thought earlier. Maybe the start won't be as gung-ho, or maybe it could be if indeed IT performs a little bit. But there is a space beyond IT which needs a discussion, simply because a lot of stocks are in focus today. And we'll talk about some of those, especially the results that have come out from Anand Rathi Wealth, from All Cargo. I think both of those would be watched out for. And some brokerage notes have been very interesting today, particularly the ones on ABB. So a lot of stocks to monitor in the session today. The first rates will be all over the place. We'll come back to the markets at the end of the pre-open session, mark some of the stocks in between. But Aditya and Kush with us. Aditya, Anand Rathi Wealth, if we haven't spoken about it already, but a set of numbers that comes in northwards of 30% almost every single quarter. Samina was mentioning that it's like the HDFC Bank of the yesteryears, right? Every quarter, you know that they deliver 30% and they do that. This quarter, they have beaten that. The AUM growth also very strong. Do you like this business, or is it expensive?
Niraj, wealth management is a theme that is going to play out over the next 10 to 15 years. We will need a lot of financial advisors advising clients who do not know anything about investments, and especially investments in equity per se. We've seen the mutual fund SIP inflows touch a record high. Some years ago, we had 40,000 crores of SIP for the entire year, and now we just have it over a single month. So this business is really very good. It has high operating leverage per se, and really long headway for growth. However, the stock has risen massively. I was just checking the valuation of the company. The valuation has now reached a staggering 18,000 crores. The stock has nearly risen from 1,000 rupees last year to about 4,300 rupees this year. So the growth is spectacular for the company. However, the valuations are already pricing in. I would like to see certain amount of correction in the stock before any amount of addition can happen in the stock.
Kush, can you come in on this one? Aditya is saying that let's wait for a bit of a corrective move, because yes, it is expensive. I mean, relative to a lot of other businesses out there available cheaper. But just that Anand Rathi Wealth has been consistently delivering. What do the charts suggest for this one?
Well, I would suggest, as Aditya is saying, wait, but for a slightly different reason. The stock's been consolidating for the good part of, the last 3-4 months, where the 4,300 mark has proven to be the high, it's proven to be the resistance. Twice that has been tested, but not broken out. So if we do get an opening above that, and if it sustains for the initial, 15 to 30 minutes, then actually it becomes a buy, on the chart. So for me, the weight is actually on the higher side. So, by the looks of it, 4,300, will be taken out at open. As I said, 15 minutes, 30 perhaps if it sustains. Then from a trading perspective, it becomes a very good, breakout, a very clear breakout. And then the targets of 44.50, even 45.50 come into play. And then, just under 4,300 is where you want to place your stop loss. So maybe the closing price of yesterday will act as your stop loss. Near-term trading perspective, bullish once 4,300 is taken out.
What about, Kush, what about some of these oil and gas stocks? They are showing strength, could be largely sector rotation. I mean, the likes of an ONGC, BPCL, HPCL look like they're in a good place. Any strategies here?
Oh, absolutely. So, ONGC, even to my surprise, has actually broken above that 300 mark. And, the reason the surprise comes around is because even yesterday, when we were hovering around the 300 mark, the open interest on the 300 strike price call option was massive. But, the stock hasn't really respected that, moved past that. So maybe some short covering could further, kick in here. In any case, the setup's quite encouraging. As I said, the 300 mark was a strong resistance. But actually, the stocks that I am now watching out for, two of them, in fact, are HPCL and IOC. And if I were to still pick one, I would say IOC is the one to keep, on your radar. Simply because, it hasn't really performed, but it's not really as bad as BPCL, which is still consolidating despite the entire pack moving up. There's a trend line breakout that we're seeing on IOC. So from a near-term perspective, 180, perhaps even a 184, should be, a rather easy target for IOC. Stop loss comes in at the 20-day moving average, which is 168. So I've been tracking this space. HPCL and IOC are the two stocks that I have on my radar right now.
Just going to just highlight for you, of course, this is not how it may necessarily play out, but IOC is at 168. It's indicating to a 3% gap down. So we'll check on it as soon as market opens up to see if you still maintain and hold that call. On TCS, the start is looking like a flat one. If we do get an okay, not anymore. If we get a start closer to 4,000 intraday, would you consider a long trade on this?
Not really. And, I'll tell you why. Yesterday in the closing show, we were having a discussion, with Niraj around TCS. What was interesting was that the long build-up, in TCS was quite encouraging. There was about a near 10% open interest build-up. The stock was close to support zones, of the 20-day moving average. So, there was a possibility that the stock could perhaps attempt a rebound. We are seeing that. But I think, past 4,000, perhaps, little over over that, which we might get 4,050. These are the levels where, you'd want to take some money off the table and then see how it, pans out during the day. So take this gap up opening as an opportunity to book profits for the day if you're carrying positions from yesterday.
What else in the tech pack are you liking, Kush? Because, if you look at some of the mid-cap tech names, a Coforge, a Persistent, an Emphasis, some action, not runaway, but some action pre-market, definitely that can be seen in some of these counters. Tata Tech also doing okay, but I would mark out these three, Persistent, even L&T Tech also not doing too badly at all. So any of these that you would pick up right now?
I do agree with Aditya on this as well, where the mid-cap names definitely have a lot more steam. Emphasis, Samina, was incidentally our call, last week. It's done rather well. Now, continuing with Emphasis is also a good option. But the other two names that I'm now looking for are KPIT Tech and Persistent. Persistent has been on our radar for a while, lost steam in between, but I think the pickup here is extremely encouraging. I think the 5,000 mark from a positional standpoint, is a level to consider as a target. KPIT Tech too, after a brief round of consolidation here too, we are seeing a breakout. So I think the three names that I have on my radar, KPIT Tech, Persistent and Emphasis.
Okay. Well, I think IT could be in for an interesting start, but beyond that, what else? We spoke about Anand Rathi Wealth as being one. What about the ones which have corrected a little bit? Do any of them give a chance? Is the other question. And we'll talk to our guests about the likes of M&M and some of the others. But it's also time for a brokerage note. And I think that stock likely starting off weakish. Anushi Johnson with the UBS view on ABB. Anushi, what do they have to say?
Hey, morning Niraj. So UBS has now downgraded ABB to a neutral rating as compared to the buy call it had held earlier. Now the price target of same has been raised to about 9,100 as compared to about 8,830, which still from the current levels shows about a 7% of an upside. So a couple of reasons that they've highlighted and as to why they've downgraded it to a neutral rating. First, that the earnings have already been upgraded by 40% by the consensus in the last 1 year if we see. So now if we go forward, they see a limited room for evaluation re-rating. Again, this is considering that the 30% earnings growth that it is expected to go forward, it seems to be already priced in. So it believes the current valuation reflects these upside case of earnings expectations going forward. So now what can lead to the buy rating again for the stock is couple of factors here. It expects if the quarterly orderly run rate goes beyond the 3,800 crore, especially from the mobility segment, it can still upgrade it to a buy. Other than that, also if there are robust margins emerging from their emerging portfolio, that is the electrification business, it can still consider it again upgrading it to a buy rating. So again, ABB has seen a phenomenal year. It's been about 80% up in this 1 year. Its valuations have remained the talk of town. So let's see how this pans out for the company and move forward accordingly.
All right. So that's the call on ABB that Anushi has been talking about. Let's look at Oil India this morning. Oil India also doing pretty well. Some of those oil and gas names and energy stocks are going to continue to be in focus. Aditya, anything specific that you would at this point look at, or do you think that this is a bit of a flash in the pan?
So I like the gas space. The gas space and the city gas distributors are doing exceptionally well. something like a Mahanagar Gas or something like a Indraprasth Gas looks really very interesting and on the gas upstream gas companies, GAIL looks really very interesting to me. So rather than looking at the oil companies, I will try to look at the gas companies where the future looks really very bright.
Right, that's the word coming in. A couple of other, Aditya, hearing up for HCL Tech as well. They report today. Any expectations on HCL Tech here? Do you feel like there could be a little bit of outperformance versus TCS, or what is the sense?
So again, I expect very stable results. In fact, I also expect them to report a slowdown in deal tractions per se. The only comfort with respect to TCS is that there is a valuation comfort, and the valuations are far significantly lower than a TCS. So net, I don't expect any of the large cap IT companies, HCL Tech, Infosys or Wipro to report spectacular set of numbers. What I'm really looking at is that bottom is getting created here over a period of time. As 25 comes in, the growth should start to really recover, and 26 should be a really good year for all of these companies. So nothing spectacular per se, but from a valuation perspective, it is much better than TCS.
Kush, a stock that is starting off well is Federal Bank. There is a brokerage upgrade, there's some buying. The derivative expert who had come in earlier suggested that the derivative position also is looking solid there, but it's starting off 2% higher. Would you trade a Federal Bank on the long side?
Well, Niraj, yesterday in the closing show, along with Sarda Energy, Federal Bank was one of our calls, 197, 201 being the target. So I think, we're opening close to that 197 mark. What I would do is I would now trail my stop loss and ride for that 201 kind of level. Fresh positions I would not initiate because, resistance comes in at that 200, 201 mark. Open interest buildup is also there. So the risk reward ratio may not be as favorable. But yes, the stock had a stellar run. If anyone's got it, as an earlier position, you should trail your, stop losses or book profit closer to the 200 mark.
Okay, a couple of more stocks that were on our radar. We'll quickly go through them. Azad Engineering was one of them, has received a 5-year contract from Germany's Siemens. That stock up 5% this morning. I want to quickly see what's happening to Apple, if anything at all. They've filed a patent for a software which could allow people to interact with podcasts. Not much on that stock, about 1% up. Are there any of these that you're tracking?
Unfortunately, I track none of these, so not be able to comment.
Okay. Kush, what about you? Any views on an Azad Engineering? That stock 5% up pre-open?
Again, not a very active track on this one, but, an Apple per se has been doing well. There's a possibility that the stock could perhaps move higher from these levels also. But again, not a very active track on Azad or Apple.
All right, let's just take a look at what is happening to even a Scient. Even a Scient is doing pretty well today, as is that entire mid-cap IT space. I think if I was looking at one big theme this morning, it continues to be the IT stocks completely. Just on the charts, Kush, what would you do with an Infosys right now? You said TCS, if it does open gap up, you would book profits. What about an Infosys? Would you create a short-term position?
Certainly not. And, even if you consider, even if you rather, for a minute ignore that the results, are also around the corner, the stock's actually close to the supply zone where, 1650, 1675, are the levels where, the stock has resisted previously. So for me, closer to resistance, the momentum indicators tapering off a little. I would not initiate fresh longs until 1680, is taken out. So for me, existing positions, well, you can continue to ride, but for a fresh position, wait for a breakout above that 1680 mark.
Right, that's the call coming in on a few of those names that we're tracking in early trade. Tech will be in a sweet spot this morning, and that seems to be the trend. But just going into budget as well, Aditya, do you have any sectors on your radar that you'd probably, or stocks that you'd consider buying maybe now up until the budget? There are a few names in the railway and the defense pack that have ran up substantially, so I'm not sure whether the risk reward remains favorable here.
So the defense stocks and the railway stocks continue to be a good theme over a period of next 5 to 10 years. However, in the near term, these stocks have risen significantly. I was reading that Mascon Dog stock has risen even faster than the Nvidia stock in the US. So we've seen that the valuation of all of these companies has risen very aggressively. So in my opinion, there will be a fillip definitely in the budget for the entire railway sector as well as the defense sector. However, most of these stocks have priced that already in. What I would look at is the fertilizer sector. What I will look at is the data centers. What I will try to look at is the beneficiaries of the PLI scheme. Is the if the government is really going to extend it. And finally, I will try to look at the FMCG names if the government is to give money in the hands of middle class.
Aditya, let me try and take that answer from you post-market open because you're just about to start the market, so I need to point that out. Here's how the markets are starting off in today's session this Friday. Let's see if IT is spurring the markets higher a bit or no. A quarter of a percent. Pull up the Nifty IT if we can very quickly and see what that is doing. 1.5% higher. TCS magic is working seemingly. Let's get the heat map up on the screen straight away. We will mark the mid caps and small caps later. TCS, Wipro, LTI, Infy, Tech Mahindra, HCL Tech. The top 6 names are the IT names. So Nifty IT clearly packing a punch. What else is there? There is a Shriram Finance, Coal India, maybe a little bit. L&T, Adani Enterprises, Bajaj Finance, but it is IT out there which is ruling the roost, and TCS is up 2.27% higher. So it started off well. Let's see if there is more in store. But Infy too about 1%. LTI, Mindtree and Wipro giving company. What is not doing well? While autos have consistently seen a bit of a downtick, the latest strategy note from Motilal Oswal cuts the weightages on auto names. Maruti suffers a little bit. Power Grid, Apollo, Sun Pharma maybe, but it is all about Nifty IT. If you can just pull up that index once more, because that index is really doing well and really helping the market spur higher. 1.7% now for this one. Really strong show, Tamanna.
I mean, the TCS boost, of course, coming through. The CPI numbers in the US and what's happened with the bond deals also probably helping when it comes to the Nifty IT this morning. But let's look at what's happening in the broader markets as well. Are you seeing that positive move all round? I would say in the positive territory, but nothing spectacular, to be honest, from the Nifty mid-cap 150. The small cap index as well, about 0.5% up. Stock specific, let's see what's buzzing in trade this morning. And we've picked up Anand Rathi to go first. That was in news, of course, because of good numbers that have come in. Total income up 38%, net profit up 38%, stock up a little over 3% in opening trade this morning. All Cargo is the other one which was on our radar. Their CFS volumes are up 20%. That update that has come in on their volumes has been something that the street has liked, about 1.5-2% up right now. ABB was on our radar because of the UBS note. They've downgraded the stock to neutral from buy, but have raised the target price to 9,100. Stock not that beaten down, I must say, about 1% down in opening trade right now. The Entertainment is the other one that has been buzzing, at least in the pre-open session, continues to show some signs of life, 1.5% up because of their fundraising plans. That board meet is going to take place next week to approve raising of funds. Mid-cap IT, though, definitely in focus. And we've been talking about the IT space. Look at an emphasis. I want to see if we can add a Persistent also very quickly to that pack. Coforge doing well, Emphasis doing well. If you can see what Persistent is also doing. So these are some of the names that are, lifted up with the entire IT story. Persistent is also up about 2%. Just Azad Engineering, I'll add, has received a 5-year contract from German's Siemens Energy Global. That stock up 5% as a newsmaker in opening trade. So these are some of the buzzers, but I reckon, Samina, the story is more about IT than anything else.
It is IT and Shipping, interestingly. So shipping stocks, we'll be talking to the management very shortly on the channel to understand what is happening amongst some of these shipbuilding and shipping counters. The stock is up 4%, but Emphasis is topping the list of Nifty mid-cap gain, Nifty 500 gainers up with a gain of 5%. Raymond is also doing okay, 4.5% higher. Zenza Tech is up 4%. Fertilizers are doing okay. RCF is up 3.5%, 4%. Info Edge is doing okay. So every sector that was coming out in sector rotation over the last 4 days are all gaining in today's day of trade. So it's almost a recovery of sorts after some of these counters could have seen a break coming in. Railtel looking good, 3.5% higher. The rest of the pull up RVNL for the sake of it and get a sense of what's happening there too. IRCTC, IRFC, or RVNL for a change is underperforming the sector. Okay, moved into positive territory as soon as I said that. But most of those counters aren't looking too bad. Tech is the biggest talking point, followed by fertilizers, railways that aren't doing too badly. Z is also up about 2%. Anand Rathi, I don't know if Tamanna mentioned it already, but a quick recheck on Anand Rathi this morning. It's not a runaway rally. Some of these counters have run up significantly over the last couple of days, so you may not see too much of an uptick in trade. But the counter at the day's high point getting picked up as we see this, 1% higher on Anand Rathi is what we have. Oil India, that's the stock of the morning. MS has raised its target on back of which Oil India trades with a gain of 6% as we see it. LT Foods, they've got a new facility in the UK. Remember, we have been talking about some of these names. The stock is up 4.5%. TCS is the stock of the morning from the large cap space that sees an up move of about 2.5%. Anand Rathi continues to add on to those gains, 1.5% higher is what we have. On the sell side, couple of names that are seeing some weakness that we'll quickly highlight for you. So chemicals looks bad once again this morning. Apart from that, banks, some of the private sector PSU banks, the mid-cap space aren't doing too well. And you've also got, so Bank Nifty, like we've seen in the FNO data, is showing a little bit of a downtick. But Nifty mid-cap is at a record high. Broader markets are outperforming the benchmark and there is some excitement on the street. So all in all, it's a good start. Kush, very quickly, any trades at the get-go this morning? How are you feeling? Would you consider any long strategies, any intraday calls on the index or stocks?
Well, not on the index just yet. The initial gains that we had seen, seem to be cooling off. So I'll wait for, the index to take a support and rebound from there. A couple of names to discuss. SJVN we had discussed as a BTSC trade, on the closing show yesterday. 155 was that first target. 155.3 is the high. So, if anyone's got that trade, it's a good idea to perhaps, book out, book the profits early and then wait for, the next round of up move around 150, 148 kind of a mark is where you can re-enter. One stock to watch for today is Hudco. This stock is sustaining, with a 0.5% gain. There's a good possibility that, a 350, 357 could also be seen, perhaps today or in the coming days. And a support zone here comes in at 338. So SJVN, a book profit from yesterday and a Hudco for a target of about 357.
Irida is also looking quite good. 5% higher on that stock is what we are seeing. Kush, very quick update. IOC was a stock that you recommended to us before the markets open. It is trading at its support. Do you still want to hold that call? Do you have a view on it? 168.20 is the price and it's down 4%.
No, Samina. 168 was the stop loss anyway that I had mentioned as a support zone, very close to that. If it does break, then it could perhaps slide further. So avoid IOC for the moment.
That's
okay, but the Samina marked an interesting stock, Ireda, and the reason why this is because if you look at the 5-day chart of Ireda, it's gone bonkers. I mean, the stock was up massively in trade yesterday as well. If you look at valuations under any stretch of imagination, Ireda is expensive. Look at that move in the last couple of trading days as well. This stock has done really, really well in the last 1 week. It's a massive 33% uptake. Now, Aditya, yes, power financiers have a very strong business model currently. But what's with Ireda?
The quote that markets can remain irrational longer than you can remain solvent. The perspective is that they are the financiers for green energy, and as you know, green energy is the go-to theme in this market. So the book value for this stock is at about 20 to 25 rupees, and the stock is trading at about 300 rupees, which makes it the most expensive lender that we have got inside the market. People have got into a frenzy for the PSU lenders per se, and I think now it is time for real caution within these sectors. Although the runway for growth is tremendous within the green energy space, we could see time correction. We have seen IT being the sector of the decade in 2020 and 2021, and now it is almost out of flavor for most investors. We saw chemicals doing the same thing in 2020, 2021, and now they're out of flavor. So don't get too much worked up about stocks trading at irrational valuations. If you have these stocks, there's no harm in half of profit booking and then staying on with half of the capital that you have got. But stay away from this frenzy per se if you have new money. Try to look at places in the market where valuations are at least half decent.
All right, let's just before we wrap up this leg of India Market Open, just have to once again mark Oil India and the fantastic move it's happening this morning. I think if there are two spaces which are stock of the day and stock of the morning, Oil India is one of them. But of course, the IT stocks are taking your breath away. Just before we go into that break, Kush, any stocks that are on your radar and you'd look at for the rest of the trading day?
Tamanna, I think we'll continue with SJVN 155 reconquered, perhaps the next target of 161, in play, and Hoodco, as I mentioned, for 357 with a stop loss of 337. We could continue with these two names.
And definitely still on the radar. Hutco also buzzing. We'll take a very short break. Thank you so much, Aditya and Kush, for joining us today. But on the other side, we're speaking with Sushant Bhansali, CEO of Ambit Asset Management, and we're talking all about the chemical sector. Stay tuned. Welcome back. You're watching India Market Open. We're focusing on a sector which has been, I would say, down in the dumps. But according to Ambit Asset Management, you could be seeing a turnaround. We're talking about the chemical space, and Sushant Bhansali, CEO of Ambit Asset Management, is with us today. Sushant, very good morning to you, and great to have you on. Let's first up just set the premise for the conversation on why you think that the chemical space is due for a turnaround. Do we have Sushant? Can you hear me? I can't quite see you. Sushant, can you hear me?
I don't think he can. Okay.
All right, you seem to be in a really nice place with a lot of greenery around. All right, let me just do a quick audio check. Did you hear my question, or let me repeat it for you?
Yeah, yes, it is.
Yeah, so I wanted you to start by setting the stage for why you think the chemical space is now in place for a turnaround after quite a long, at least 2 years of being down in the dumps.
Yeah, so we had a dream run between 2017 and 22 for 5 good years. And post-COVID, the prices just surged up and had I would say, at the top end in 2021 and 22, early 22. It's that.
Well, okay, let's just.
Yeah, I don't think that audio is very clear. Sushant, we can't hear you at all.
Well, let's just wait for that to come in. But the note is interesting because they are saying that it's poised for a bull run with a 48% CAGR in the period that it ran up from 17 to 22, and how that rally was strong. But can this period, which has seen a bit of a lackluster performance, morph into something which could be a favorable demand scenario for chemical companies? Now, I would reckon that would come in for global growth coming back, if you will. And if the Indian chemical industry can repeat some piece of what it did in FY 17 to 22 by virtue of being a choice of being a preferred supplier of sorts. Now, Sushant, sorry, this was my analysis, but would just love to understand that after being down for the last 2 years, why is it, or what are the factors that lead you to believe that things are turning at the margin?
Yeah, so key reasons behind, I would say, is that in the global context, the demand is coming back. The commentary, if you see from most of the players, is quite positive globally, be it BASF, be it FMC, Bayer. Every large company is now talking about favorable demand mix, and that will lead to restocking of goods. Due to high working capital, almost all of them have come down from 6 to 8 months inventory to 1 to 2 months inventory, and we see a restocking coming. The pricing has recovered in the past 2 or 3 months, and we believe that should sustain. The supply chain issues of 2021, 22, and 23 because of COVID and then war at a few places led to a lot of cost increase on logistics side. That seems to have resolved. There might be minor hiccups in between, but structurally, I would say the restocking led with price recovery should lead to good margins and good volumes for Indian chemical players, and that is where we have betted on. We were amongst the first few players on, I would say, the portfolio management side, where we invested heavily in chemical companies in 2016 and 17, and got out of most of them in 22 and 23. We got, I would say, increased our allocations to chemicals in the last couple of months. And if you look at the prices of the stocks also, market seems to have picked up as well in the last 1 month on that.
So, Sushant, there is India's rising competitiveness versus global players granted. Is it happening across the board, or do you believe specific pockets within the chemical space could actually do well? Because it's a very wide bucket, and a lot of ideas actually are bottom-up ideas more than top-down ideas.
Yeah, definitely. I think if you look at the chemical industry in India, there are two parts, the commodities part and the specialty part. On the specialty side, every player actually is very different from the other player. So there is no large competitiveness within the players in the country. I think each of them is competing with someone else globally and trying to place the products on two pieces, either on the thesis of having a backward integration facility and thereby having a better pricing, or specializing in some high value add products and being, I would say, supplying top quality products and able to garner a larger market share. So these two, I would say, are the key themes which we are looking. The third theme which has been emerging in last few years in very few players is import substitution. The government's focus has been quite a lot on having domestic production rather than importing. And gradually, I would say that few players which started, they have got into 1 or 2 more products. And we are seeing more products, especially with PLI incentives into this sector coming as well. More of that piece is playing out in the next 3-5 years. There's been a lot of capex which has taken place in the last 5 years. And not much utilization in the last 2 years. So we believe the capex intensity will also come down. So the free cash flows of this sector will be quite good compared to the last 2 years in the next 2 or 3 years.
Shant, let's just continue to break that sector down. So while fluoropolymers and consumption has seen an uptick, agrochems are still struggling. Prices have been declining for the last 3-4 quarters. Now that could be on back of global destocking. Do you feel like agrochem could be a weak spot, and if the buy calls have to come in, they should largely be focused maybe on consumption, discretionary and fluoropolymers instead of going with agrochem?
While the prices have been coming down, if you look at agrochemical exports, has been the only player in this country in this whole space of specialty chemicals, which has been able to deliver the earning growth which was delivered in those 5 years between 17 and 22 in the last 2 years as well. And so we believe that this price reduction or reduction in volume will again come back, and agrochemical exports should continue. On the domestic front, definitely I would say agrochemicals will be dependent on how rainfall happens, and hopefully we'll have a good monsoon this year, so the domestic demand will also pick up. Domestic demand has been struggling for last 2 or 3 years, but the exports on agrochemicals have been quite good actually the last couple of years, sparing probably other chemicals which you mentioned.
What is the downside to this case that you've built? And because the base case is that you're going to have a good monsoon, you're going to have agri-sector demand growing. What could be the possible challenge here?
So if the interest rates continue to remain high and the working capital, again, I would say becomes a challenging spot for global players. And if the climate change leads to, I would say, unfavorable weather conditions globally, that can again lead to in few subsectors of chemicals, especially chemicals, coming under, I would say, pressure, and the volumes don't pick up the way we are anticipating right now.
We were talking to Galaxy Surficants a few days ago. Of course, very excited that demand is going to see an uptake, industry is going to see a growth. He mentioned to us that the worry now is not on the demand side. The fact is that they're having logistical issues on the supply side because of the Red Sea crisis, and that is what may impact how the quarter has been. Do you feel like this is a problem for the sector, because only now that it's started coming out of the dumps, you're now hit by supply side worries on back of Red Sea?
Yeah, no, as I earlier mentioned, that there will be minor hiccups on the logistics side, Red Sea crisis amongst them probably. But these are probably short-term in nature. I don't think they will have a long-lasting impact of 6 months, 12 months, or more than that. There might be a few weeks which will have, I would say, rates being getting shot up. And more importantly, other than this crisis, I think availability of carriers also is becoming challenge at a few I would say places, and that's the problem not just for the chemical sector, but probably most of the exporters of the countries which are facing the same challenge.
What is the sort of top stock that you would pick in this space right now, Sushant, with a slightly more longer term view?
So look at players, I would say, on import substitution, where I would say the prices are now favorable, as well as agrochemicals. Again, while they have posted good earning growth for the last 2 years, the prices, because of the, I would say, disfavor amongst investors of the sector, have not participated compared to the earning growth. And there seems to be some value proposition in agrochemicals for sure.
Okay. Sushant, what about Indian players which are building in substantial capacity for import substitution? It could be phenol, it could be a clutch of other chemistries as well. And they've been around for a while, have the competency as well. Is there something out there that could catch, that could actually have significant earnings growth potential?
Yeah, no, definitely. I think while the capacities were created, the prices were not in favor. And all said and done in this sector, India is a price taker. We don't control the global prices. I think it's China-led globally. And once the prices are in favor, I think there will be good earning growth for import substitution as well. The capacities have been created, and the focus of the government has been to, I would say, curb imports to the extent possible. And once the capacities are in place and prices are in favor, I would say we can see, I think, the next 2 or 3 years with, I would say, amongst the best years for chemical and import substitution categories.
Very lastly, Sushant, the budget is around the corner and expectations are running high for various sectors. Now, this one was the golden goose in that sense, right, a few years ago. With this whole China plus one, India turning into a manufacturing hub, do you feel like this sector could be a beneficiary of key announcements or reforms in the budget?
Yeah, definitely. As government's focus has been to increase more and more of manufacturing, because that's what will solve the job creation problem. I would say that there will be various aspects of budget which will be keenly watched by the sector, be it increased PLI allocations for this sector, be it incentive schemes for jobs getting created outside PLI, or also on import substitution and probably duties, import duties as well. I think a combination of that, and not necessarily just the budget. I think further announcements post budget also will be quite keenly watched for the next 6 to 12 months.
Okay. Sushant, great having you. Good note, interesting thoughts. It'll be lovely to test this hypothesis maybe 6 months, 9 months out. But thanks so much for taking the time out and speaking to us today.
Thank you.
That's the view from Ambit Asset Management. Sushant Bansali talking about the chemical space and how select pockets within the chemical space could actually have a good run in the times to come. I'll tell you what's had a good run is shipping companies, and particularly G Shipping has had a fabulous run the last few days. So on the other side, we're joined by Mr. G Shivakumar, CEO of ED and CFO of G Shipping, to talk about what's happening within the shipping space, global comparables, and what the earnings outlook could be like. Stay tuned.
right, so a bump up in the markets as well. I'll just pull up the Nifty, and IT is carrying the show all through the way. So in the last few minutes of trade, and it's just been about half an hour since the markets have opened, you have seen IT stocks really buzzing, and the Nifty actually, moving up quite confidently. What's moving on the Nifty? Let's pull up the heat map as well. TCS, of course, 2.5% up, but Shriram Finance has snuck up to top the charts. Apart from that, Wipro, LTI Mindtree, Infi, Tech Mahindra, all of them in flavor this morning on the IT, and Axis Bank also doing pretty well. On the losing side, you're seeing Maruti having another bad day, and maybe a bit of profit booking there after its phenomenal run coming in, and HDFC Life also not really working. Apart from that, in SBI Life. So remember, all of your insurance companies after their monthly updates had really run up, and you're seeing that sector rotation very clearly in the Indian markets as well. So IT, the flavor of the morning, will it continue? We'll have to see. Let's also tell you that TCS is the story of the morning, and we're going to be hearing from the management in just a short while from now. So stay tuned for that. That's going to be the other big story. Meanwhile, let's just pull up and see what the broader markets are doing as well, the small cap and the mid cap, the indices, and where all the action is. Because while you do have the IT majors pushing up the Nifty, it's positive but nothing fantastic on the side of the broader markets. If you look at it, the real story is Oil India. Oil India having a fantastic run, about 7% up. Look at an RCF. RCF also had news coming in, deal wins coming in. So RCF also is an entry to the winners list today. I would say that's extending to other fertilizer stocks as well. Fact is up 6%. Z Entertainment on the back of that fundraise meeting, and one of the stocks you spoke about this morning, Niraj, is buzzing about 6.5% up. But even railways and Ircon, Railtel, all of them doing very, very well this morning. So I would say mid-cap, IT, rail, fertilizer. These are some of the key buzzers.
Yep, certainly. That's the set of names. Federal Bank on that UBS upgrade has done well for itself. So that's the other stock to monitor in the session today for sure. So keep that one at the back of your mind most certainly. I wonder what yesterday's key mover, including G Shipping, is doing in the session today, because it had a big bang last few days. Wonder what it is doing today. A bit flattish, but a couple of percentage points higher still. And the other one is IREDA, which had this big move, started off 5% higher. Let's see if that is doing more in the session. In fact, now 5.5% higher. This is serious stuff for IREDA. So certainly doing well. PB Fintech has pulled back a little bit. Amara Raja has pulled back a little bit. Indigo Paint, which was up 10% day before yesterday, is down about a couple of percentage points. So that's the third one that I spot. And Samina, much as Anand Rathi Wealth might be doing well, 361 today is sulking a little bit, 1.5% lower in trade.
It's giving up everything it picked up in the last couple of weeks. It was the star trade for so many weeks, and now, of course, a little muted. But, of course, shipping is going to be one sector that we will, of course, connect with through the day. G Shipping, along with other shipping stocks, have been done exceptionally well. There is a buzz that there could be big reforms coming in for the shipping sector in this budget. Maritime India Vision 2030 may be launched. So all that has led to some of these counters doing well. This morning as well, G Shipping is up about 2%. Let's take a look at the other shipbuilders. So Mazgaon or Cochin, all those counters, I would imagine, are seeing some sort of movement. Mazgaon is muted, down about 1.5%. Cochin is trading flat. The other counters that in that space that do well usually are the likes of a Garden Reach. Railways are not doing too badly. Again, it's a mixed trade there. Fertilizers doing well as well, but the story of the day has got to be IT. Actually, while we're at that, I don't know whether we did this, but a quick check on the dollar-rupee pair. With the reduction in inflation and an expectation of 90% bets on traders expecting a rate cut in September, the rupee should have seen some movement against the dollar. So the dollar-rupee pair is one thing. There you go, actually flat. the rupee is clearly resistant and managed so extremely well that you don't see too much of a reaction coming in on the local currency despite what happens globally. The story of the morning will be TCS. HCL Tech will report earnings tomorrow as well. The likes of the mid-cap IT names at Tata, Elxsi, KPIT, Persistent are some of the stocks that will continue to be in focus. We will be cutting across the management anytime now to get a sense and understanding of the outlook for the company going ahead. That's live footage in front of you there. My colleagues Sajid and Richa will be in conversation with the management to see whether or not those green shoots are real, whether that goes beyond BSNL. Order wins stand at the tune of $8.3 billion, slightly lower than what we'd seen in the same quarter last year or in the previous quarter, but in line with what the management was expecting in that range of 7 billion to 10 billion. Well, what you also want to keep in mind is TCB. Okay, I'm going to cut over to Sajid and Richa who are in conversation so we get a better understanding of what's happening at TCS.
Hello and welcome to Earnings Edge. My guest today is Kriti Watson, who is the MD and CEO of TCS. Kriti, thank you very much for joining us on NDTV Profit. My first question to you is, you spoke about growth. Your growth also spoke about, it's difficult to call out at this point in time. I want you to elaborate this statement because you grew in Q1 and you are saying that you will do better than FY24. So how do you, elaborate on the growth and what exactly, when you say that it's difficult to call out?
Sajid, it's quite simple. Like we keep tracking the kind of projects that we do, the kind of customer confidence in what they want to do, and what kind of projects get reprioritized. We still find some amount of volatility there, and we also seen instances where some of the projects have been paused at a shorter notice. So when that tendency reduces, right? When projects don't get paused at a shorter notice, or when reevaluation of long-standing project comes down, it will give us more confidence. But currently, customers continue to be evaluating projects, looking at which is the right